Ladies and gentlemen, welcome back to the channel. Tesla stock today had a great day following the Fed. And here in today's episode, we're going to do a bunch of different things, okay? We're going to look and kind of summarize what the Fed did today, what they said today, what this means for markets, why the markets responded positively to the Fed. We're going to look at what Donald Trump said around the same time the Fed, Jerome Powell's press conference was taking place, and some of the positive things said by Trump about the stock market. We're also going to look at what's ahead for this market, why I think stocks will continue to work higher at this point, and specifically what's next for Tesla. It looks like Tesla is about to break out in a pretty big way. Do me a quick favor before we get into all of this key information. Hit that like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys have not done so already. With that said, let's begin. Okay, now first and foremost, let's discuss what the Fed said today. Let me just give you an overview, okay? The Fed did not really change much from their September SEP, okay, Summary of Economic Projections. Not a lot changed, okay? They almost looked identical at face value. Specifically, the federal funds rate projection remained the same. Did not move. The Fed projected 3.6% by the end of this year, which is where we are now, the midpoint of the federal fund range. 3.4% by the end of next year, pricing in about one cut, and 2027 stayed at 3.1%. There was zero change on the projected federal funds rate. This is what we talked about for days heading into the Fed. There was not going to be a big change today. There was not going to be any big predictions made by the Fed for the path of the federal funds rate, okay? Because we have so much data that we're going to get over the coming weeks. Jerome Powell said, we take things meeting by meeting, okay? He didn't even take a hardline approach on a pause in January. Like he said, hey, most Fed officials agree that a pause in early 2026 is the most likely outcome, but he's still leaving the door open for anything to happen. Why? Because we get that big data next week, and the markets are going to price in what they feel the Fed should do. Okay, and that's why the Fed didn't take a hardline approach today. That was my expectation, and that is a big positive for this market. But what's actually interesting as well is the Fed raised their GDP forecast a little bit for this year from 1.6% to 1.7%, but next year they raised their GDP projection from 1.8% to 2.3%. So the Fed massively raised growth expectations for next year. They kept their unemployment projections the same at 4.5% by the end of this year and 4.4% by the end of 2026. They lowered their PCE target a little bit from 3% to 2.9% at the end of this year. They lowered their PCE inflation target for next year from 2.6% to 2.4%. Now, they also lowered their core PCE projection for the end of this year from 3.1% to 3%, and lowered their PCE projection for next year, their core, from 2.6% to 2.5%. So they lowered inflation expectations. They raised GDP expectations a lot for next year and kept unemployment the same and kept the federal funds rate projection the same. So basically the Fed's saying, hey, look, we think we're going to have better growth next year and lower inflation than we thought before in September. Okay, that is about as good as it gets. Now, you would have wanted to see the expectations for Fed cuts to go up a little bit as well. He didn't get that. But again, it's all determined on the economic data. In a idealistic situation, you would want inflation to plummet and the economy to do well. Now, Jerome Powell says that without tariffs, and as long as we don't get any additional tariff increases, that goods inflation from tariffs should peak in Q1. That is what Walmart said on their earnings. So I think Jerome Powell is kind of getting that from Walmart and what retailers have said. Jerome Powell says without tariffs, inflation would be in the low twos. So basically, I think the big question is next year is not what happens to the economy, not do we have a recession or not, as some people were fearing in the last 2 months, but the question really is how much does inflation come down? How much progress do we make on inflation? And it's progress on inflation that's going to determine, what happens to this federal funds rate situation. If we don't make any progress, we get 0, maybe 1 cuts next year. If we make a lot of progress, we get 2 or 3 cuts next year. And I think that's the best possible scenario you want to be in, right? It leaves it data dependent, not on do we have a strong or weak economy necessarily. That's obviously going to always be there. But assuming we're going to have a strong economy, it leaves the question of rate cuts up to inflation, which is theoretically how it should be. So I do personally think, as I projected before, with the Fed out of the way, with a strong September and the strong seasonal setup that we have in December, the economic data that we get December 16th, which is going to be next Tuesday and likely, throughout next week. I haven't actually taken a look, but I know we get a lot of data on December 16th. You're set up for a very aggressive short-term rally here. Now, if next week's data comes in good, then like inflation coming down and the economy doing well, then you can start to price in more than 1 cut next year. And for the Fed to be cutting into a strong economy, into an economy where inflation is coming down, where AI is alive and well, and the consumer strengthens, big beautiful bill, no tax on tips, no tax on overtime, being able to write off, auto loan interest, all of those things, helping the consumer out, real estate potentially picking up a little bit, could unlock a lot of equity in people's, bank accounts, right? People would be finally able to sell their home, buy a new home, and realize that equity gain. Because it's kind of a messed up situation we're in right now. I've given this example on the channel a couple of times now, but if you bought a home in 2021 and you still work the same job, you might have $100,000 or $200,000 of equity in your home, but you might not be able to afford the same kind of mortgage you got back in 2021 because of where rates are and where home prices are. So you may not qualify for a new home, but you have all of this equity that's basically untapped in your home. It's kind of a weird situation we're in, but that could unlock hundreds of billions of dollars. Okay. Beyond that, we're going to have trade certainty next year, a lot more than we had in 2025. We're going to get a new Fed chair in May. And there's something else I'm missing, but point is, we have a strong setup for next year. We have a strong tactical setup for the end of this year. There will be a problem at some point next year, but from where I see it, it is an easy decision to get long quickly in this market, especially from a tactical perspective. If you're underperforming the S&P, like as a hedge fund or institution, you want to not underperform the S&P that much. You want to get things right-sized pretty damn soon here as we exit this year. Now, Oracle earnings did come out here in after hours as well. Profitability, adjusted EPS came in a lot better than expected at $2.26. Estimate was $1.64. Adjusted revenue did miss, coming in at $16.06 billion. The estimate was $16.21 billion. They also missed on operating income a little bit. Adjusted operating margin missed a little bit. Cloud revenue missed a little bit. Software revenue missed a little bit. So a slight miss across the board, but for the stock that was really beaten down in the last quarter, it's not nearly as bad as I think where a lot of people thought it could be. Oracle is down about 5% in after hours, but again, not a terrible situation either, considering the bond market blowout that Oracle had over the past 2 months. Now, Donald Trump comments on the Fed chair selection process today. He says, quote, "I am meeting with Warsh today." Donald Trump says you can have tremendous growth without inflation. That's the best case scenario, right? That is the idealistic scenario for next year and for this market is you have tremendous growth and inflation comes down. That happens, you're golden. Donald Trump says, quote, you're going to laugh at this, don't see why we can't have 20%, 25% GDP growth. Yeah, that would be insane. U.S. President Donald Trump just commented on today's rate cut decision. He says the rate cut was a smaller number and could have been more. Donald Trump says the Fed interest rate cut could have been doubled. That's actually what Fed Moran voted for today. There was 3 dissents. Fed Goolsbee, Fed Schmidt did not want to cut rates at all today, and Fed Moran dissented because he wanted to cut rates by 50 basis points. Donald Trump says if the market goes up, we should encourage it to go up more. Donald Trump says the stock market should continue to go up with great results. Donald Trump said today we should be able to do more than 3 or 4% GDP growth. Donald Trump says we'll approve plant construction in a matter of weeks, basically saying they're cutting red tape and we're getting building in this country. And one of the other big headlines from Powell today, Fed Powell, when asked if we are seeing a positive productivity shock, says yes. That is massive, okay? Because productivity is growth. Productivity going up is growth. So again, as I've said already throughout this video, I believe the Fed, just getting the Fed out of the way, with what was said, basically, hey, we're data dependent, but we're expecting a strong economy with inflation that makes progress next year, and that's what allows us cuts, mixed with the strong economic, backdrop for next year. Big beautiful bill, no tax on tips, no tax on overtime, real estate potentially picking up, unlocking a lot of extra spending money for the consumer. AI is alive and well. We're going to have more trade deals and more trade certainty. All of these positive things for next year mixed with the tactical setup that we have on markets from now into the end of this year makes me very optimistic in what we see over the coming weeks for Tesla. And I think my certainty personally has grown that we do see Tesla a $500 stock by the end of this year and early into 2026. And honestly, what happened with the Fed today is exactly what I predicted we were going to get from the Fed. Not a lot of certainty, a lot of kick the can down the road to the next Fed meeting. A Fed that's pretty well in line with where the markets are pricing. And under that circumstance, as I said before today, if we got that from the Fed, that's very positive. That will allow for the tactical rally, in my opinion, into the end of this year, right? The Santa Claus rally, if you will. Jerome Powell also said some very, positive things as well. Like we're in a positive productivity shock surrounding AI. And some of those comments hit a little hard today as well, in a good way. And I think while it's going to take a little bit of time for markets to digest the Fed, as it typically does, this is going to be seen as the big moment, I believe, for a Santa Claus or a year-end rally for this market that likely extends into 2026 as well. So, from a technical perspective, Tesla also looks really good. Recently bounced off the 50-day moving average, working up to some of the higher levels. The stock was a clear outperformer today. And we don't have a lot in terms of economic data tomorrow. Initial jobless claims, exports, imports, and the balance of trade for September. Not going to be too impactful at all. And then Friday, all we have is 3 Fed speakers. Fed Goolsbee, which dissented, did not want a rate cut today. So a little bit bearish commentary probably coming out of Goolsbee on Friday. Fed Hammock and Fed Paulson that voted in favor of a rate cut today. So there's not a lot between now and the end of this week that could really derail this market, considering Powell was pretty much in line with market's expectations, which at this point likely continues to fuel a recovery from the crash or correction we've had over the past 2 months or so. And I think it's going to be some of the risk-on areas, right? The risk-on area, the risk-on trade, the small caps, the AI, the hyper-growth stocks. they're really in a position to benefit from this the most because they need a strong economy. They also love liquidity. The Fed buying $60 billion of short-term, treasury bills over the next couple of months, providing that liquidity furthermore strengthens the near-term prospects for this market. Of course, again, the economic data, that's the big question. What does it kind of do to pricing of expectations next year for Fed policy? But still, again, you're not pricing in a cut until almost 8 months into next year. I think the odds are better than not that when we do get the economic data coming out next week and the following weeks, you might start to price in a cut sooner. Probably not because the economy sucks, but because inflation makes some progress. Okay, even the Fed thinks inflation is going to make more progress than they thought back in September. So while there's still some unanswered questions, I do think this paves the way for an end of the year rally, specifically for Tesla, for AI, for some of your growth areas. This is almost a perfect market for growth stocks. Okay. So let me know your thoughts on this down below in the comment section. Again, this breakout could be pretty aggressive for Tesla. If we get any Tesla specific news, that's obviously going to be big as well. We had some today, but not a whole lot. Elon Musk did say today that FSD unsupervised is pretty much solved at this point and that Tesla will be launching robotaxis with no safety monitors in about 3 weeks in Austin, Texas. He also teased a new FSD model that is coming in about 1 to 2 months. So that obviously looks good as well. But until Tesla says, unsupervised FSD, then it's technically not unsupervised FSD. Now, TAG Energy has secured financing for its new $170 million Tesla Megapack order to build a 4-hour big battery next to what will be the biggest wind farm in Australia and the Southern Hemisphere. Tesla has also secured a new $310 million Megapack contract to expand one of the largest battery energy storage systems in Australia as well. Elon Musk said today that Waymo never really had a chance against Tesla. This will be obvious in hindsight. And BMW EV drivers in the US now have access to Tesla's supercharger network. Tesla is now offering discounts of up to $1,500 off new Model Y standard vehicles in US inventory, with discounts of up to $2,000 that are also being offered on Model Y premiums. So obviously, again, the big story was the Fed today and Jerome Powell, and that's the big catalyst that's gonna move this market higher and move Tesla stock higher. So hit that like button as well as subscribe to the channel. Let me know your thoughts on this down below in the comment section. If you guys have not done so already, check that link out down below in the description of today's episode if you guys want to come join the trading community. Have a great rest of your day, and I will see you in the next one.